For decades, the United Arab Emirates cultivated a reputation as a predictable sanctuary for global capital. Wealthy individuals and multinational corporations viewed these glass towers as an impenetrable fortress for their assets. But despite this outward display of strength, the government is now quietly lobbying the United States for an emergency financial backstop. They're requesting a currency swap line. This mechanism allows a foreign central bank to access US dollars at a low cost, and it is usually reserved for moments of extreme market distress. Abu Dhabi would not be negotiating for this financial lifeline if its domestic reserves could withstand the return to war. This outreach proves the regional conflict is already dismantling the UAE's economic foundation. The physical catalyst began with the infrastructure. Recent Iranian airstrikes targeted and severely damaged critical segments of the UAE's oil and liquid natural gas facilities. Geography compounds this disruption. The Strait of Hormuz acts as a mandatory choke point for UAE exports, and recent fighting forced its closure. With routes blocked, the UAE loses the physical ability to sell its primary resource globally. These severe physical disruptions instantly triggered global investor panic, forcing massive amounts of capital to rapidly flee the country. The physical destruction of pipelines was only the first blow. The real damage was to investor confidence, which evaporated as the UAE shifted from a safe haven to a combat zone. A currency swap line would address this by allowing the UAE to borrow US dollars directly from the Federal Reserve, quickly and cheaply. This access is vital because the Emirati economy is built on crude oil, a commodity that is priced and settled exclusively in US dollars. This creates a dangerous liquidity gap. As oil shipments are blocked, dollar revenue plummets, while at the same time, panicked investors are demanding dollars to move their wealth into safer jurisdictions. While the UAE has a $5 billion backup line with Bahrain, that amount is nowhere near enough to sustain the economy through a prolonged war. When a wealthy nation faces this type of liquidity crisis, it is often forced to trade its geopolitical independence for financial survival. By asking Washington for a dollar lifeline, the UAE is giving the United States a massive new source of leverage. We can see the danger of this arrangement in Iraq. Earlier this year, the U.S. effectively froze the Iraqi economy by halting dollar shipments to their central bank in New York. This was possible because 90% of the Iraqi economy depends on oil revenues held inside this single Federal Reserve account. Washington used this financial bottleneck to demand political changes, threatening to cut off the money supply if specific pro-Iranian officials were not removed from the cabinet. Granting a swap line to the UAE would give Washington that same level of control, allowing them to extract major military or diplomatic concessions. The economic fallout will remain long after the fighting stops. Regional officials warn that the logistical damage to tanker schedules and shipping will take over a year to recover. This realization is causing friction within the UAE, as some officials now believe that aligning with recent U.S. policy decisions has drawn them into a devastating economic crossfire. The image of a predictable, safe haven is gone. Once global investors lose faith in a region's security, that confidence is almost impossible to rebuild. Iran has proven that as long as the Gulf states participate in these regional wars, their fragile, oil-dependent economies will remain high-value targets. Battlefield outcomes are now inseparable from financial survival. In modern conflict, the ability to grant or deny access to the US dollar is the ultimate instrument of strategic control.